This podcast was recorded prior to January 30th, 2026, a day which saw the most intraday volatility for the silver price on record, making the forthcoming discussion all the more timely and relevant. We hope you enjoy it.
Hello and welcome to Sprott Radio. I'm your host, Ed Coyne, Senior Managing Partner at Sprott. Today we have one of our very own PMs on, Maria Smirnova, who's our CIO and Senior Portfolio Manager at Sprott Asset Management. Maria, once again, thank you for joining me on Sprott Radio.
Hello, everyone, and Ed, thank you for having me back.
Well, Maria, the last year and a half, 2 years have been incredible with silver. You do all things silver. So let's just start with what really kicked off this incredible run we've had in silver for the last year and a half, 2 years now. What was some of the things that really got this going?
Well, I think this rally has been long in the making. We've been following the silver market for a long time, obviously. And we've tracked all the developments that happened in the last 10, 20 years. And of course, as most people by now know, silver has been in a physical supply-demand deficit for now at least 5 to 7 years, depending whether you count ETFs or not. And I count ETFs as part of the demand equation. So I say silver has been in deficit for 7 years. And what has driven that deficit is stagnating and, in fact, declining mine supply. Believe it or not, in the last 10 years, we've actually lost ounces from mine supply. And on the flip side, demand has been growing, particularly electronics, industrial demand. And of course, when we talk about electronics and industrial demand, we talk largely about solar, we talk about electric vehicles, we talk about now AI data centers, the build out, or as I say, anything to do with electrification of the world. Silver is instrumental in that. And it's a lot of different uses. And so that's been growing to records year after year. And therefore, we've faced this complete shortage of physical silver. Now, of course, last year we started talking about potential tariffs on silver in the US. And that sparked a bit of a short squeeze, or I would say supply squeeze in London. Now, as you probably are aware also, most of physical silver is stored on two exchanges in the world, and that one is in London, LBMA, and the other is in COMEX in New York. And so metal started moving from LBMA to COMEX last year because the level of unallocated silver in London became so low that it really was lower than daily trading volume in London, which is phenomenal. And that's kind of sparked the rally. And of course, I always thinking back to last year, to me, when silver broke out through $35 in about June, that to me was very significant. Again, silver has been kind of doing a basing pattern over many, many years. And once it broke out, it kind of took a life on its own last year.
Is there enough silver for data centers and AI and all these other things we're doing? Is there enough silver to meet that demand? What are you hearing out there? What are you seeing out there as it relates to supply demand dynamics? I think you said we're now a 7-year deficit. So at some point there has to be a reckoning that, hey, we don't have enough silver to do what we want to do. Is that potentially driving some of this price movement and volatility as well?
Yeah, it certainly got us here today, but I do think with recent prices, we are reading about some erosion in demand in solar, for example. Now, how significant and how fast that can happen, I don't think it can happen that fast. But right now, also, what we're seeing is a lot of investment demand out of the East, particularly China and India. Silver is trading at significant premiums to spot, both in China and in India. I think I looked on Bloomberg today and it was around 20% to spot, actually. It's a very significant premium. Wow. And of course, in China is importing all this silver. Why? Because of industry. But there's also investment demand. And similarly with India, from both coins, bars, jewelry, ETFs. All of these things have been growing, particularly starting, I would say, late last year. And the higher the price has gone, interestingly, the more demand has been sparked over there. So to answer your question, there's a lot of moving parts. And the key question of where will we get the silver? Well, let's see. There's two primary sources, right? Mine supply and scrap supply. Scrap supply has been quite flat over the last 10 years, just under 200 million ounces. Now, that's not really even a lot of ounces if you think about it. So we'll see what happens to scrap. At what point do people start bringing their jewelry and spoons and etc. to recycle and for scrap? That's question number one. And question number two, of course, is what happens to mine supply? From my experience, and as I mentioned, two things. It's very difficult to bring on new mine supply. It takes a new mine, I think the stat is at least 17 years for a new mine from discovery to production. So it's quite inelastic. We've had a shortage of new silver mine discoveries in the last few years. And also, we've had all kinds of geopolitical things and, other factors. Permitting has been longer, getting longer all over the world. So there's a lot of moving parts on mine supply. And I don't think that it's going to be easy to add mine supply in silver. To put things in perspective, let's say the deficit right now is between 100 million and 200 million ounces. This is on a 1 billion ounce total supply number annually. So in order to fill that gap, just to fill that gap, we need between 10 and 20 new, very substantial mines. Do we see that on the drawing board? We see some mines on the drawing board, and my job is to look at mining equities and silver and gold mining equities every day. But I don't see enough to fill that gap. So again, in order to fill that gap, we're going to have to see some destruction of demand, which yet we're not seeing. We'll see. Or an increase in scrap, something. But to your point, I don't know where it's going to come from. And therefore, I think, that's why silver is where it is.
It's interesting. You're hearing calls for silver at 150, and now seen as high as 300. But you're also getting some calls to silver to return back to 40, 50, $60 an ounce. And I think it seems to me that people that are calling for a price target aren't understanding the drastic move that silver has made, and that it has stepped out of the precious metals realm into the critical material realm. Is silver truly now a critical material, a metal that's getting consumed and really has its own personality and has finally stepped out of gold's shadow? In your view, is that actually happening now? Is silver truly a consumer metal?
Well, yes and no. To go back to your initial comment, I absolutely agree. I think there's very little consensus right now in the analytical community about where silver price will go next. It's just we haven't seen, I don't know, at least I haven't seen these types of moves so fast before. And to your point, the question is what's driving it? Well, the industrial demand side has been building for a long time. I mean, it's roughly, I would say, 50-50 in terms of investment demand versus industrial demand. And like I said, there might be some erosion of demand going forward. Now, to me, silver is a critical material. Over time, we will need more and more silver to use in all these uses. Because again, I think that theme of the world electrifying, building out power grids, building out data centers, whatever you have, electric vehicles, all of these trends, I don't see kind of subsiding necessarily. So I think over time we'll need more and more silver. Now, investment demand, I still think does play a very important role. For example, in countries in India and China, silver is viewed as a monetary asset. In India specifically, there's a lot of silver jewelry, right? But jewelry is not viewed as consumption. It's actually viewed as an investment, right? So the question is, would all the people who have silver jewelry run out and sell it? I don't know the answer to that question. I don't think so, though, because again, to me, it's viewed as an investment more than anything in certain places in the world. And that means that investment, that's other side of the equation, remains a very important factor.
Well, and speaking of investment, I assume you roll that into the whole concept of store of value, right? If you have a silver necklace, you have silver jewelry and so forth, it's storing part of your value. It's part of your net worth. It's part of your portfolio.
Absolutely. Yeah.
Okay, so it's interesting when you said scrap and about people turning in their jewelry. I was at a party actually this weekend. People, of course, know what I do for a living, and people were coming up to me and asking me about turning in their, necklaces and things. That's never happened in my entire career at this firm, over north of a decade now. That people are starting to at least think about that. So maybe it needs to be higher before scrap starts to really become part of the inventory equation. Have you seen in the past a stress moment in time? Is there a magic number where you start seeing more scrap come to market?
Like I said, scrap supply has been kind of stagnating under 200 million ounces a year. So we haven't seen that pinch point yet. And again, you're talking about people in the West, and I think right now there's much more interest in the East.
Yeah, good point.
For example, in January, we're actually seeing some outflows out of ETFs in the West, right?
If you go back 2, 3 years ago and said silver's at 50, that'd be considered a huge win. I mean, maybe it has gotten a little ahead of itself. Maybe the market's gotten a little too enthusiastic. In your mind, what would cause a meaningful pullback? And we'll call a meaningful pullback, say 20% or 30%. Right now, we're seeing volatility in the 5 to 10% range. Just this week alone, we've seen silver off 5 to 10%, and the next day it's up 5 to 10%. So it feels like there's some volatility working its way into the market. Either A, that's setting the stage for a higher high, or B, maybe people are taking profit and we'll see a bit of a pullback here. Any kind of thought on directionally where that could be headed in the short term?
It's really hard to tell, but I guess to me, pullbacks are healthy. Even if we have a 20 to 30% pullback, that'll only take us back to a couple of months ago, if not even maybe a month ago. I'm not afraid of pullbacks. And you mentioned something, store of value. To me, silver is store of value. And you have to think, the DXY, the dollar right now is going down. President Trump seems to want a weaker dollar. He wants lower interest rates, etc. I mean, that all argues for higher silver, gold, copper, all kinds of prices, higher prices going forward. So even if we have a pullback, I think longer term, there's so many different reasons why silver should be going higher and doing well. These are structural developments, right? I mean, these are not short-term things. I'm talking about a span of 10 years here. We've been coming to this point, if not more. Again, mine supply, hard to come by, a lack of new discoveries. And by the way, another thing about mine supply, it constantly disappoints. Whatever projection you have, it usually comes in lower than expected because there's always some kind of operational issue or, a strike or something like that, right? But I'm digressing a bit. But just to go back, that's one reason, right? Supply. Demand, again, I think these trends that we're seeing in demand, that they're not going to reverse. I mean, there might be some pullback in solar installs or silver use in solar, but year over year, we should be kind of longer term having growth in demand.
Speaking of demand and staying on demand, one of the questions I get a lot from investors and advisors is, are there any replacement metals that could effectively, if silver got limited in its supply, continue to get limited in supply, or if the price got unreasonably high, say, we're in the $300-400 an ounce range, is there anything that can step in and alleviate some of that? Is there another metal out there that could potentially replace silver, at least on the margin?
So the metal we usually reference as a substitute for silver is copper.
Okay.
It also has good electrical conductivity. We're actually now reading about, again, in China, I think because in China, there's so much demand for silver, they're trying to calm the market. There's been articles recently talking about how the Chinese solar panel manufacturers are going to try to switch to copper to reduce silver use. And again, that's a big question mark. How fast can that happen? How fast can you develop new technologies and retool your factories? And by the way, copper price is going up right now as we speak as well, right? And by the way, there's also a deficit of copper.
Hmm.
So to answer your question, copper is the metal we usually think about.
You've touched a little bit on the miners themselves. Miners seem to be back in vogue here when you look at their balance sheets and so forth. Let's spend a few minutes on the miners because, as you mentioned, I think I wrote this down correctly. You said around 17 years from discovery to production of pulling actual silver out of the ground. How is the health of the mining industry right now, particularly as it relates to silver, just in general?
Well, that's an excellent question. A couple of points there. I think the mining companies are doing better than they have in a long, long time. And even prior to this run up in prices, I think mining companies have tried to fix their balance sheets. They have been focused on operational efficiency. They have been focused on reducing debt, returning capital to shareholders. That actually started before these jumps in gold and silver prices. And so now, with these price levels, they're making fantastic margins. They're making free cash flow. Again, they're returning capital in terms of buying back shares, paying dividends. They're doing all good things. And this is what I like to see. They're starting to increase exploration budgets. And of course, I always want more exploration dollars in the ground because that's how we make new discoveries. So hopefully, with these higher prices, we can see a resurgence in nice results from these companies. I will also say that mining equities, and particularly silver equities, I don't think are pricing in current prices. It's like the market doesn't believe spot prices yet. And part of the issue is that sell side analysts, generally speaking, they don't really use spot prices to value things or to set targets, etc. And also, sell side analysts usually have declining prices, metals
Right.
prices, that is. That's why the miners haven't really caught up. So I think depending on how the silver price settles out and plays out and holds in, there's definitely an opportunity in silver miners. And I think, our strategist, Paul Wong, I will reference him. He wrote recently that the silver miners have been breaking out actually on a very long term basis, turning
Hmm.
around and breaking out, and he's seeing positive patterns there. So I think we are in a period where if things kind of continue the way we see them, there's a big opportunity in the silver miners.
And you mentioned something. I just want to get clarification on this. The analysts don't typically look at spot price. What are they looking at then to understand the valuations of some of these companies? What price are they looking at?
Well, they have their price decks, right? And a price deck is just an assumption of the metal price per year going forward.
Okay.
And of course, a lot of the time, commodity strategists set these price decks. And as we've just discussed, very recently, there's very little agreement.
Right.
I've seen projections ranging from $150 silver to like maybe even $300 silver. And then, as you mentioned, some other analysts are talking about $40, $50 silver again.
Right. Right.
So it's kind of undecided currently.
What would you say to an investor that maybe has had success in silver, but more importantly, an investor is maybe looking at silver for the first time, that this run up has got their attention? They want to think about it. How can they make it part of their portfolio going forward? What would you have them think about? What should they consider as they look to add silver potentially to their portfolios?
Well, again, I mean, everyone has a different situation.
Hmm.
And I'm quite biased, as you can appreciate. A lot of my, wealth is linked to the metals and our firm. I would say think longer term and think about what's happening in the world. Like I said, I think that one of the biggest drivers is the geopolitical situation in the world. Basically what's happening is there's a worldwide fiat currency debasement. So you have to consider for yourself, obviously, we're not all solar makers, etc. So we're investors, and I would consider how you view the world and what you think of where the dollar is going, where's the Canadian dollar going, and I'm in Canada, right? How do you protect your wealth is how I would think about it. And to me, gold and silver are integral parts of protecting your wealth against inflation, against currency debasement. Governments can always print more money. But as we have learned, it's not very easy to print more gold and silver.
That's right.
And I will leave it at that.
Yeah, I always hear, governments have two advantages that we don't have in our balance sheet. We can't tax and we can't print. So we have to either earn, invest, or save. That's it. Those are the
Right.
levers we have to pull. So, well, Maria, it's always great to catch up with you. I know I'm going to see you in a couple of weeks for our quarterly board meeting. So it'll be good to see you in person, but it's always a treat to have you on our podcast. And I know our listeners love hearing from you and what you're doing in silver. So thanks for taking the time today.
Thank you very much.
And thank you all for listening. Once again, I'm Ed Coyne, and you're listening to Sprott Radio.
This podcast is provided for information purposes only from sources believed to be reliable. However, Sprott does not warrant its completeness or accuracy. Any opinions and estimates constitute our judgment as of the date of this material and are subject to change without notice. Past performance is not indicative of future results. This communication is not intended as an offer or solicitation for the purchase or sale of any financial instrument. Any opinions and recommendations herein do not take into account individual client circumstances, objectives, or needs, and are not intended as recommendations of particular securities, financial instruments, or strategies. You must make your own independent decisions regarding any securities, financial instruments, or strategies mentioned or related to the information herein. This communication may not be redistributed or retransmitted in whole or in part, or in any form or manner without the express written consent of Sprott. Any unauthorized use or disclosure is prohibited. Receipt and review of this information constitutes your agreement not to redistribute or retransmit the contents and information contained in this communication without first obtaining express permission from an authorized officer of Sprott.